What's up, guys? If you're like some of my followers, you're probably freaking out right about now. Cryptocurrencies have been hitting a hard wall. They've fallen as far as 50, 60, sometimes 70%. Bitcoin was as high as 20,000, and as of yesterday, it dipped as low as 5,900, although it already recovered almost to $8,000. One of the questions I get most often is, how do I handle when a market correction like this happens at this scale? When people literally see the investments evaporate by 50%. The one common theme that I always see when markets go down is that emotions run high. Everyone is second guessing themselves. Everyone that was before championing cryptocurrencies, Bitcoin, or the same applies to stocks. Whatever they was championing and saying, wow, this will change the world, this will go to $1 million, $100,000, whatever the number is, all of a sudden now it's like you flip a switch and you're like, well, what if it goes away tomorrow? What if something crazy happens? Well, look at it this way. The fundamentals haven't changed. Cryptocurrencies as a market cap were worth over $800 billion, perhaps a month ago. And now they're worth less than $300 billion. And I'm telling you, in that month, the fundamentals have not changed in a negative way. If anything, they changed in a positive way. As a matter of fact, in January, I attended 2 major cryptocurrency conferences where I was able to meet a lot of the founders. I met some of the teams. I saw some of the changes that are happening in the industry, some of the products that are being built, some of the big companies that are getting involved now. And as a matter of fact, just recently, February 6th, we had a Senate hearing where both the chairman of the SEC and the CFTC spoke positively about cryptocurrencies and blockchain. So the ironic thing is that even though the markets are down dramatically, absolutely, 60%, that is not easy for many people to swallow, but the fundamentals haven't changed. So that is the first good thing. Now, how you make it through is all a question of knowing your strategy. Because it's always easy to say, well, you should only put as much as you're willing to lose into money. And that is an awesome piece of advice for when you start investing. But maybe many of you already disregarded that piece of advice and already have way too much in crypto, and now you're wondering, what can I do? What should I do? So here's where we go down to the nitty-gritty. Knowing your strategy. If you want to keep it simple, there's mainly 3 strategies that you can apply when investing and trading cryptocurrencies. You can either be a hodler, you can be a swing trader, or you can be a day trader if we focus on the time frames. So if you are a hodler, I want you to do the following. Please spell out what hodl means. It means hold on for dear life. Well, I'm sure you were screaming hodl from the rooftops when everything was just going to the moon, but now when things are coming down, that's when you need to really practice hodling. Of course it's easy holding when everything's going up, but the hard time is when the market comes crashing down. That's when you're being tested whether or not you can actually, respect the word hodl. So if you've previously decided that you want to be a hodler, that you're a passive long-term investor, then now is your time to really take a step back and keep your trigger fingers away from the keyboard. So what can you do? Perhaps number 1, delete your portfolio apps if you're finding yourself checking every 5 minutes. Perhaps even block CoinMarketCap for a week or 2. So that will make it a lot easier for you to feel the constant sting, the constant pain when you check, I lost another $1,000. I lost another $1,000. Because you're playing the longer game. And it's not me telling you to play the long game. It's yourself from 2 weeks ago who decided, well, I'm playing the long game, I'm gonna hodl. Well, if you said so yourself, then do so. So removing any kind of reminders that the market is going down will help you hold through it. And also secondly, put your money in cold storage. If your money's on cold storage, it's a lot harder for you to make an impulsive trade. Because if your money's in cold storage, you first have to transfer it out of cold storage onto your exchange, which will take many block confirmations, and then you're able to trade it. So that is an extra layer of protection to keep yourself from second guessing yourself. And third and lastly, go into nature. Do something fun that it doesn't involve a computer so that you remove yourself from constantly staring at the charts. Because if you're a hodler, there's nothing you can do. The only thing you can do is hold on for dear life. Number 2. If you're a swing trader and you're in a down market, it is important for you to understand that the intermediary or maybe even the primary trend is bearish. So what you need to do really is to get in at extreme lows, meaning when everything's falling and maybe you feel the fear like, oh, what if it goes lower? That's probably when you should buy, and then you sell When everyone feels that relief, like, oh, things are going up again, things are looking good, that's when you need to go up. Because the mistake I see a lot of swing traders make is that they wait and wait and wait to get in until they see the pullback and they're like, oh, I think we're back into bullishness. They buy at the top of the swing, basically at the bounce, they buy at the top of the bounce, they see it coming down, and then they panic sell, and essentially they do this over and over and over again. So in fact, they're losing more money than if they had simply held through it. So it's important for you, essentially, when the pain is highest, you need to buy or hold, and then when you feel that relief, like, oh, things are going up, but you see that on, for example, the 1 hour chart or the 6 hour chart, you're still looking bearish, you're still in the same trend line, you get out, you capture that profit. And then you set a new limit trigger, maybe below, so that you can get in cheaper once again. The bottom line, if you're a swing trader, you need to really keep track and see, are you simply panic selling and panic buying? And if so, maybe simply do not trade when the market is falling and wait for proper confirmation on the 1 day chart. Because otherwise you can really wreck yourself and lose a lot of money. Number 3, day traders. Now look, day traders, you can make a killing out there even when the market is dropping. But if you don't know what you're doing, you can also lose everything. So I really put you to heart to know what you're doing and keep a journal. Because here's the problem. If you don't keep a journal, what is likely to happen is that you do trade after trade after trade after trade, and all of a sudden you find your account balance significantly down. So what I do personally, when I'm day trading, I always set timeouts. That means if I have more than 2 or maybe 3 losing trades, I shut my laptop and I quit trading for a day. If I do 3 losing trades in a row, maybe even a week. It's important to have the right psychology, because the problem is if you do losing trade after losing trade after losing trade, you're so much more likely to be in a negative mindset, or maybe even like, look, maybe the market is just too hard to capture a profit. If it's just going straight up down, and if the market keeps dropping, then just step away. You really shouldn't be day trading unless you're able to have a more than 50% win to loss ratio. And because if you have less, then you're probably losing money, you're wasting money, and you're also wasting your time. So keep track of every single trade and have rules in place where if you have too many losing trades in a row, you step away from the computer and you take a break, and then you go back at it with a clear mindset, a clear strategy, a clear plan in order to keep winning it. Because there's a lot of money that can be made day trading, but if you're simply winging it, if you're just doing it out of your gut, and especially if you revenge trade, you can destroy your entire portfolio in a day. So be cautious out there. So guys, I know the markets are chopping hard. I know emotions are running high, and maybe some of you are freaking out. Maybe some of you put way too much money into crypto, money that you're not able to lose, money that maybe was supposed to pay for rent next month. I totally get that. Always make sure that when you invest, you only invest with money you're willing to lose, that you do not depend on for, let's say, the next 3 to 6 months. When markets come crashing down, your life goes on. You don't want to put yourself in a situation where you're forced to liquidate your crypto at the bottom in order to pay for living expenses, because essentially you're spending 4 times as much money on the living expenses than you should, since crypto's worth 4 times as much just a few weeks ago. So be careful out there, decide what strategy you'll be using and stick to that strategy. I hope you guys make it through this correction all right, and we'll hopefully be back to new highs just a few months from now, or maybe even a few weeks from now. And from there on forward, always make sure to trade smart, to manage your risk, and to take those profits. I'll see you next time. By the way, don't forget, in the description, as always, I put some valuable links with some free information. I actually got a 7-day free training on cryptocurrency trading that might be really valuable to you. And don't forget to hit the subscribe button right below. Every single day, we post valuable content from cryptocurrencies to emerging tech, sharing stuff like daily vlogs, interviews with founders, and lesson videos just like this one that will help you become a better trader, a better entrepreneur, and be at the edge of information of what is happening in emerging technology markets. So I'll see you next time.
Yeah, this my note if I die. Think I tried to write this song 370 times. I could never say this, but I think for a reason that's so much bigger than me.